Most people think life insurance is just about what happens when you're gone. But what if I told you it could actually build your wealth, protect your dreams, and secure your future, all at the same time? In this video, you'll discover how to turn life insurance into a powerful financial tool that works for you, not just your loved ones. Today, we're diving into a topic that most people misunderstand, yet it could completely transform the way you manage your money and your peace of mind. We're talking about life insurance and financial insurance products. What they are, how they work, and how they can become a key part of your long-term wealth strategy. Why it matters. Most people think insurance is just about what happens when you're gone. But that's only part of the story. In reality, the right insurance policy can help you live better today, invest smarter tomorrow, and build a financial legacy that lasts. Think of it this way. Investing grows your money. Insurance protects your money. Together, they form the foundation of real financial freedom. So what exactly is a life insurance policy? At its core, it's a contract between you and an insurance company. You pay regular premiums, and in return, the company promises to pay a lump sum, called the death benefit, to your beneficiaries if something happens to you. But beyond this traditional idea, modern life insurance can be much more. There are products designed not only to protect your loved ones but also to grow your wealth. These are called financial insurance products, and they include things like investment-linked life policies, unit-linked insurance plans, or capital accumulation policies. They combine the protection of traditional insurance with the growth potential of investments, giving you the best of both worlds. Stay tuned and hit that subscribe button. After we break down how to structure it, I'll reveal actionable strategies you can apply today to start seeing results. Here's how a smart structure might look. 1. Basic protection. A simple term life policy that covers your income or key expenses so your family is financially safe no matter what. It's the simplest and most affordable type of protection. You pay a small premium every month, and in exchange, your loved ones receive a lump sum, often hundreds of thousands of dollars, if something happens to you during the coverage period. 2. Wealth building component. A unit-linked or investment-oriented policy that lets your money grow over time, often with tax advantages. Certain policies allow you to invest part of your premiums into financial markets, like stocks, bonds, or mutual funds, combining safety and growth. The magic is that you're not just paying for protection. You're building an asset. A portion goes toward pure insurance coverage, and the remaining is invested in chosen funds. 3. Long-term planning. This is where insurance stops being a product and becomes a strategy. Some policies allow you to accumulate cash value, borrow against it, or use it as collateral, turning your insurance into a flexible financial tool. Certain types of policies, like whole life, universal life, or cash value policies, not only provide lifelong protection, but also accumulate value inside the plan. That value, often called cash value, grows over time and can be used in creative and practical ways. When these three layers, basic protection, wealth building, and long-term planning, work together, something incredible happens. You no longer see insurance as a cost, but as a tool. A tool that protects your loved ones, grows your wealth, and gives you options in the future. The key is balance. Protect first, then invest within that protection framework. Here's the problem. Most people buy insurance only once, often when they have their first child or buy a home, and then they forget about it for decades. The result? They end up paying for products that no longer match their life goals. The solution is to treat your insurance like a living plan, not a one-time purchase. Every few years, review it as your income, family needs, and goals evolve. Adjust your coverage, check your beneficiaries, and explore whether your policy could also help you build capital or save on taxes. That's how smart investors turn a simple policy into a real wealth management strategy. Now it's time to dive in and explore the benefits, the limitations, and the risks. Let's be honest, no financial product is perfect. The benefits are clear. Peace of mind for you and your loved ones. Potential investment growth. Possible tax advantages. Access to liquidity through policy loans or cash value. The limits? Costs can be high if you don't compare offers carefully. The returns are not guaranteed, especially in investment-linked products. And of course, it's a long-term commitment. Canceling early can lead to losses. But remember, the real risk is doing nothing. Without a plan, one unexpected event can destroy years of effort. Now let's dive into the strategies and practical tips you can start using right now. If you want to get started, here's a simple strategy. 1. Define your goals. What are you protecting? A family, a business, or your retirement? Start with protection first, and calculate what you really need. Take your annual income and multiply it by 10 to 12. That's roughly how much coverage your family would need to maintain their lifestyle if something happened to you. Start with term life insurance if your budget is limited. It's affordable, straightforward, and gives you maximum coverage for minimum cost. Then, as your income grows, you can upgrade to more advanced, investment-linked products. 2. Set your time horizon. How long do you want coverage? 10 years? 30 years? For life? The real advantage lies in discipline and time. Consistent premiums over 10, 20, or 30 years can compound into a surprisingly strong portfolio. 3. Mix protection and growth. Combine a traditional life policy with an investment-linked one to build value over time. The smartest investors often combine different types of insurance to create a balanced, flexible system. For example, a term policy for high coverage at low cost, a unit-linked policy for long-term investment growth, a whole life policy for stability and cash value. Each plays a different role. One protects, one grows, one sustains. Together, they form a financial safety net that adapts to every stage of life. 4. Review regularly. Once a year, check performance, premiums, and benefits. Adjust when life changes. This is where most people fail. They buy insurance once and forget about it. But your life evolves. Your income changes, your family grows, your goals shift. So your insurance should evolve too. When done right, your insurance becomes more than a safety net. It becomes a bridge between your present and your future. So, here's the key takeaway. Life insurance and financial insurance products aren't just about what happens if you're not there. They're about ensuring that your dreams, your goals, and your loved ones are protected, no matter what life brings. Because the ultimate goal isn't just to make money. It's to build a life that's strong, stable, and meaningful, even in the face of uncertainty. Your financial plan is your story. And the best time to start writing the next chapter is today. Do you want to find out how to save more, invest better, and plan concrete goals? If you'd like to know more, subscribe to the channel and watch the next video.